Good everyone, Les here from BG Trading and I hope you are well. Today is 6th of June 2024 and I'll be analyzing some of the stocks that you have chosen for us. We're going to explore the possibility of me buying those stocks or not, and what does the chart says for each one of them. So the first one is going to be Dominos, then we're going to analyze Global Hydrogen ETF, then Pura Hidrogen and Elevated Uranium. Let's have a look. Just want to remind you, this is not a financial advice, it's just us from BG Trading, sharing with you how we apply BGS20 strategy together with our VIP members to buy stocks and chase 20 to 40% within 1 to 3 month time. How we set up targets, stop losses, how we avoid FOMO, and much more. I'd like to remind you that we are currently running end of financial year offer. So essentially, this is what happens when you buy our VIP membership program 12 and 24 months. You will get extra length free of charge and also free access to our online courses. You can learn all about BGS20 throughout up trading and trading mastery online courses. Though this offer is only valid until the end of this financial year, 30th of June. Remember, this is tax deductible if you are trading enough, and also we're going to be rising prices in 1st of July, so make sure you run and don't let it slip. So let's start with Dominos now. This is DMP. This is a large cap, very well known by institutional investors, and a lot of superannuation managed funds holding this stock. It keeps falling as the company has been struggling with inflation. They essentially have to revisit its own strategy because they increase the prices too much in some countries, and then they end up losing customers and not growing fast enough. Remember, every time you're going to buy stock, take a look behind the scenes a little bit. If you don't want to dig into reports, which I strongly recommend you should, but if you don't want it, we can do that for you through our VIP membership program. Or you can take a very high level look on the stock by going to asx.com.au and typing the code and taking a look what's happening in the market capitalization, the stock price, and the revenue and profitability, and whether the company pays dividend. So essentially, this is a dividend stock. Essentially, what's happening here is you can see the margins are very, very thin, and the net profit has been decreasing, which is not positive, but we can see that reflecting on the share price, as Dominos back in 2022 was $160. That was at lockdowns, and then went down all the way to $38. It's actually trading really, really low at the moment. So if you are attempting trading, so this is would be a very interesting time to jump in. So this is in the buying area. However, it doesn't give us 20% range until the next support level. So if you were to trade this particular stock, we're not going to trade this, but if you were to trade, I would suggest to potentially look into exit around this resistance. This resistance level. Okay, let's take a look what the RSI looks like. Well, it seems to be a little bit of a bullish divergence here, which is positive, but still we need to see what those the upcoming financial result for FY24 will be like, and then see whether the market will like or not of the what's coming next. So constructive formation okay, bullish intersection level 1, and then bullish intersection level 2 as well. So we could see this could be a potential, like if you gotta try buy this particular stock, that would be a very interesting time right here. But again, I don't see enough range unless you chase the SMA 250, which is the long-term moving average, which is sitting on $47. Then you have your 25%, 24% profit. But we could see a lot of sellers popping up around $45, and then you ultimately end up missing the sale. So I strongly suggest, if you're gonna buy this, to chase 15% and set the target right under $45. That's what I would do. Again, I'm not interested in buying Dominos now. This is our last time attempt trading. This stock didn't reach the target that we aim, and then trapped on the stop loss at $46. There was a missing trade, which we set the stop loss just under this hypothetical support level right there. For us, Dominos is a buy, but 15% trading range before potentially see another leg down, testing maybe a higher high, or a higher low, or even testing those lows, a low level again of $36. Let's move to global hydrogen, which is Hgen. Now, if you are a believer that hydrogen would replace or be effectively used worldwide, which is already happening, so this could be a good investment. First thing we need to do is just understand that what exactly hydrogen ETF is all about, and then you gotta go and dig it into understand what are the exposures here, and then understand whether those companies that are growth stocks are actually companies that produce hydrogen, companies that are in fact offering hydrogen infrastructure. That's what you need to do. This is a high level analysis. Okay, so the yield is extremely low, so essentially what you want to chase here is the shape, the ETF price movement, right? And according to this chart formation, if you apply BGS20 strategy, you want to be buying under or at these red line levels here. So the entry position for us, if you're going to buy this ETF, would be buying around $5.15 or under. So if the ETF goes down again around $5.15, then there could be a buying opportunity. I mean, to buy safely, according to strategy, buying a technically discounted price. At the moment, there is a little bit of distance here. At the moment, I believe we could see the candles testing back into the red line here, and then coming all the way around $5.20. So actually $5.20 looks pretty good entry. I put $5.15, but I think I will be happy with $5.20. And then obviously you gotta set your targets, make sure you have a stop loss as well, and check what's happening with the hydrogen hype prices as well. So pretty damn good entry if you able to buy under $5.20. So you need to wait a little bit for Hgen. At the moment, it's just a hold in potentially buying more or entry under $5.20. Now let's talk about Pura Hidrogen. This is a very interesting stock. I first met these guys on Nusa Investor Mining conference, and then so one of our members here has asked to take a look on this PH2, and they even put looks like bottomed and holding this support for a long time. And he's actually right. He's actually has it looks like has bottomed. And the thing is with these companies, they actually having a lot of contract. They produce trucks fueled by hydrogen cells, and they are getting new contracts. Garbage, I think by memory is Coca-Cola as well. I have to revisit this particular company fundamentals, but the chart formation looks very interesting, as you can see on the Hgen green candles, and then we have a small sort of a sell-off, but the volume has dried up, as you can see, and then start buying again. And what I want to see is whether the next few green candles will come up with a high volume. If that happens, then we could see a breakout of these 25 cents here, and we could see, and then pretty much the sky will be the limit. We could even see Pura Hidrogen go to 50 cents in no time. But I gotta say this: it is trading at the formal levels. Is ideally we want to be buying at 15 cents. Okay, so if you wanna be conservative and getting to, according to our strategy, again, this is not financial advice, just the way we look into it. If you wanna go conservatively, you would better off wait to buy around 15 cents at this sort of level here. So those two moving averages, the pink and the red line, that's where ideally we want to be buying, at these levels or under, but not really above. At the moment we are at the formal area right there. Okay, now how are we gonna trade? How can we trade stocks at the formal area? Here's my tips for you. So if you want to trade this, let's say hypothetically you want to buy this now, that's fine, you can buy now, but you need to set a stop loss right here under this yellow line. So essentially your stop loss would be something around 11% down. Okay, you can buy and hold, and it will be 11% down. This is not BGS20 strategy. This is just a what we call level 2 trading strategy, which we can trade at formal levels, but you have to have a stop loss just under the EMA, the yellow line, EMA 9, which is another indicator of BGS20. So make sure, if you're going to trade, make sure you have a stop loss right here, or if you want to go conservatively, just wait and buy around 15 cents. Okay, we could see this stock coming back around 15 cents. Who knows? But the current chart formation suggests that we could see this consolidation going for a little longer, and then another breakout to the upside. Okay, so we need to make sure you understand what's happening behind the scenes. And again, this is still kind of a speculative stock. As you can see, they only start generating revenue. Now, I'm not 100% sure whether this is revenue from this profit is from probably some capital raising. Okay, we need to dig it in. We need to take a look what's happening with this particular company. And I think I'm even going to put an analysis into our community, because I'm actually very interested on this particular company now. So you just got to understand that, because it doesn't make sense. Your revenue is $390,000. How come your profit will be $1.44 million? Doesn't make sense. Most likely this is capital raised from the market or from an investor or something like that, and it came in the books as a profit. So you have to take a look at that. But overall, it is speculative, high risk. You gotta be careful. That's why normally best really to go conservative, buy under those lines. If you want to risk, make sure you have a stop loss right there. Market's not very rewarding at the moment. We are heading towards the end of financial year. There's a lot of people selling stocks for tax purposes. So just be careful with that. And then the last one is elevated uranium. So EL8. Elevated uranium is a Uranium Explorer. So highly speculative. So you go as well on the SX site, you can see here the company generate huge losses. This is exactly the opposite way we wanted to, because they burn in cash in order to find the results. So they need to raise capital all the time, which is that's when it becomes challenging, because if you're holding the stock and the company is raising capital, the stock goes down depending on the offer of the capital raising. But if you're going to trade as per the chart formation, it looks very, very good for an entry. And then there is a 28% range here to buy. So now the question is, what's happening with uranium prices? So go to trading economics. So you don't have to subscribe anything. Just go trading economics. Take a look what's happening with uranium prices. It's a common knowledge that uranium investment hasn't happened over the last decade. And then that's what has been squeezing supply, and then uranium prices has been going up all over 2023, but as you can see here, has plateaued in 2024. So the best thing really is if you're not sure what happened with uranium prices, maybe just don't trade. Okay, so if you expect uranium prices to keep rising, then definitely it would be stock to be looking at buying at the moment, and you just can buy and sell right there. I would set a target around 60 cents and chase 28% from this. The good thing is the stock's trading right where I would like to be buying, so which means you can set a very tight stop loss, say for 28% profit goal. So target, so you can set up a 5% stop loss, okay? And if it falls on the stop loss, just sell it. Just sell it. Don't hold. Too risky, okay? Now, if it bounces back right here, you see how it bounces really quickly? And these candles are huge percentage. So as you can see here, this is like 10% share price movement in the one day. So if it happens again, we could see a reversal here, then definitely a 28% target, 60 cents, get out, wait to fall again, as because uranium prices are trading in a plateau, sort of a trading sideways, and then buy again when it falls into a technically discounted price. Okay, this is my view on those 5 stocks. So Dominos is a buy. Global Hydrogen ETF, I wouldn't be touching. I would wait a little bit. Pura Hidrogen would be speculative buy, but it's straight into high. You need to make sure you set up stop loss because it is at the FOMO area. So set up stop loss about 9%. So I wouldn't be buying that now. But I would be looking to elevate uranium. That could be a good entry stock now. So Dominos and elevate uranium essentially are the 2 stocks that I will be buying at the current levels. Okay. Hope that was valuable. Let us know what you think about those 2 stocks. Again, this is a high level analysis. I'm not even digging into fundamentals. Okay, I just want to make you aware of what are the risks and the type of stocks that you are looking into, okay, before buying. Thank you, and I'll see you in the next video. Bye.